Julia, where do you see the market going? If you take the example of Saudi Aramco, and we've been trying to figure out whether this is, a Saudi story, whether this is an oil story, but overall, it seems to be like a yield story, right? The markets are actually craving yield. Well,
yes. I mean, I think as Julian said, if in a world where some of those tail risks don't seem as prominent, then you have to get back to business and invest your money, and then it becomes a yield-seeking world. So that's the question: is have we really escaped the tail risks? We've seen some stabilization out of China. That's very key. We've seen central banks pivot and, to willingness to support the economy. That's key. I think we've got some other bumps on the horizon. There's still an open question of what comes next in China. I don't think we're going to get another 2016 surge in credit growth.
Yeah.
So we are going to settle down to a lower growth world. I think that's key for investors to think about. And then we've got fiscal risks in the U.S. in the fall.
Right.
So.
Julian, to Dr. Coronado's statement, is it a 2006 yield-seeking world? Are we back to the desperation 18 and 12 and 7 months before August of 2007?
It's the accumulation of events could get us there. The one thing that's different is, again, you're going into an election year where there is going to be a propensity to keep things moving buoyantly and to keep spending.
Oh, come on. Do you believe this is going to be fiscal stimulus?
No.
In the election year?
No, I think right now we're seeing...
Is that the phrase?
My assumption has been that the Congress would get past this fiscal cliff, but I think that there are greater risks that doesn't happen, or growing risks. I think the level of political dysfunction that we're seeing is intensifying. So we've got a debt ceiling and we've got a fiscal cliff we've got to avoid in the fall. At a minimum, it's going to get really hectic and pretty messy. And the best that we can hope for isn't stimulus. The best we can hope for is just not a contraction, not a fiscal drag from a budget that has to level shift down. The most we're going to get is just a level. So that whole fiscal ship that has buoyed markets for the last 2 years is largely in the rearview mirror.